Hey everyone, and welcome back to another edition of Learn to Trade with Tony. And today I'm going to talk about the relative strength index and how to identify areas of overbought and oversold conditions. So the relative strength index, or RSI, is a common used indicator. However, I prefer to use it in reversal situations, judging reversals. I don't tend to use it personally in terms of entry and exits. It's just more of a confirmation. It's on its own. It's limited. I believe it's limited in terms of accuracy to be effective. But when you pair it with other indicators or price action, it can be very useful. I hope you enjoy this tutorial, and if you haven't already, hit the thumbs up button and subscribe to the channel for more educational day trading content. See you soon. Hello, welcome back to another lesson of how to trade with Tony. And this video, I'm going to talk about how to identify overbought and oversold conditions using the relative strength index. Now, the relative strength index, or the RSI, is a very common indicator which you can plot on the chart by clicking indicators, scrolling down to the appropriate relative strength index. Okay, and go ahead and close that. And you can see at the bottom of the chart, we have a box. There's the 30 and 70, which is the top and bottom of the chart respectively, okay? Essentially what this thing does is it tells you when we may be overbought or oversold. Now, there are some things that you should pay attention to. So, for example, double tops can form and double bottoms, those type of things. And they can form before you actually see something on the chart. The area between 70 and 30 is considered to be normal. It's not overbought or oversold, so at that point you really don't need to bother with the indicator. Although it should be said that typically above 50 will occur in an uptrend, and below 50 will occur in a downtrend. So for example, let's take a look at the Disney 1 hour chart, and let's take a look at how it panned out. Well, you can see we have a double bottom underneath the 30 level, which is the oversold area. It's lower, and you can see we did in fact bounce. However, we didn't get the overbought signal, so you can see that we just pull back a little bit in that sense by the RSI itself. It does typically need some tweaking or some secondary indicator or price action to become for it to become fully effective. You can use things like trend lines as well. Here's a double bottom in the oversold. Right along this now, there's a nice big hammer there, which of course is a sign of support, or it's a bullish signal. And if you're using the RSI to exit, you're probably still in the trade in theory. At least, of course, this was for several days, and a day trade probably out by then, long before then anyway. But really, at that point, you can see how it does kind of pan out. Okay. Now let's go ahead and switch over to another stock here. Let's try Walmart. Okay. You can see that, interestingly enough, Walmart gaps right here on earnings, and we went immediately into overbought, and that's extremely overbought. We fell right away, the fall all the way to at least here before bouncing back. And we don't get a signal here, but we get a signal there, and that was a buy signal, a short-term buy signal. We got overbought here, we pulled back, and we didn't get a signal going back the other direction. And see, that's the thing. Your price obviously can turn before it gets overbought or oversold. So this is just more or less looking at extremes, if you will. Extremes in price movement, betting that the market will return to its standard pricing mechanisms. So, as I mentioned previously, there's also the possibility in some situations to use trend lines. So if you suddenly break a trend line, that in itself can be a signal. You probably can see that we had a nice trend line here, and then we broke through it right there. And that was a sell signal. Got a little bit of a double bottom, but it wasn't in the oversold area. You know, read into that what you will, but it certainly does work. Interestingly enough, though, it's not a signal in and of itself. You can see that we were climbing long before the price actually broke higher, so that could have been a little bit of a tip-off. Go ahead and go to the 1 hour chart here. You can see, as I mentioned previously, overbought, and then we took off to the downside. At this juncture, you can see that this was overbought, but by itself, that signal may have found you in some trouble. That's why it's wise to often use support and resistance, like I'm always mentioning, I've mentioned in other videos, to recognize where a decent trade may play out. So using that, we start to look at the possibility of using, for example, right here, you can see several attempts to break down through there, and I draw your attention to that. It's just oversold. It was a buying opportunity. This previous gap, of course, would attract some attention. Oversold, so that's a buying opportunity. And when you look at the charts here, you can see that there's clearly something going on right at that price of just above 87, 87.30 or 87.25. Oversold, and then oversold again, which is also at 88, an area that's been of interest recently as well. So you can use the RSI in a multitude of different ways, but as a general rule, I would suggest that you want to use it as a secondary indicator. You want to use it for confirmation. Confirm, an example, a shooting star or a trend line break or something like that, just to kind of give you something else to hang your hat on.